It's been a little while since I did a Pine Script video lesson, so I'm going to give you guys one today before I head off to New Zealand for a couple of weeks. Today's lesson is going to be a relatively simple one compared to some of the lessons on my channel, but I think it's going to be quite valuable. It's going to teach you guys how to display your drawdowns in terms of time. None of the material in this video is financial advice. I'm experienced in managing my own finances, but I'm not qualified to give anyone advice on what to buy or sell. You should always do your own research and due diligence before engaging in trading or investing. And please seek professional guidance if you need it. I'll put a video link somewhere to the lesson describing the script. This is just a mean reversion script developed for the S&P 500 SPY. So it's an ETF single market system. It's not spectacular. I mean, it's profitable, but if we turn on my monthly performance table, you can see that our rate of return is only about 5%. So not great. But anyway, that's not the point of today's lesson. The point of today's lesson is to code up something that you can plug into any strategy you've ever made. So this should work for any script on TradingView. All you need to do is copy in my code here, and this will calculate the time you've spent in drawdown. And it will also tell you the length of your average drawdown. If you're interested in my monthly performance table code, which is also something you can just copy and paste into your own scripts. So here's the example strategy. If you come down to here and just copy all of this into your strategy script beneath at the bottom of your script, it will add a monthly breakdown performance of your system, which is quite valuable for understanding the nuances of your system. So the past couple of videos I did on the channel have been doing quite well actually, which is really good to see. It's good to see that you guys are interested in these core fundamentals of trading. This stuff isn't very sexy, but it's so important as a trader, understanding the mathematics behind trading and how to safely and robustly handle drawdowns. And in these videos, I mention the importance of accounting for time drawdown. And so in today's video, we are going to explore that, as I said. So as you can see here, the worst drawdown this system theoretically endured during its historical backtest all the way back to whenever the first bar is on my chart. Back around 1995, this system took its first trade. The longest drawdown it suffered was 810 days, which is just over 2 years, which is not ideal for a daily chart system. That's not good. Ideally, you want that number to be much less than that. I mean, a year is acceptable for most professional traders and firms. You know, there's tons and tons of fantastic long-term performing firms out there, and hedge funds, proprietary trading firms that have had a year where they didn't make any money. That's reasonable, but anything beyond that starts to get a bit punishing in terms of your rate of return over the long term. So in short, I'm basically saying this isn't a system you'd want to trade probably, but this code is useful for figuring that out with the systems you are developing. So again, this is all example purposes. You can pretty much ignore this system entirely and just focus on the code today. So let me open up the source code to this. The link will be below, as always, to the source code. You can go and download it and play around with it. Here's my example strategy system. You can get rid of this completely and replace it with your own. So replace this with your own entry reasons and exit reasons. This is the code we really want to work with. Now, I could pretty this up, make the colors better. I'm not going to bother with today's video because, as those of you on my weekly newsletter know, I injured my neck a few weeks ago.
I can't turn left.
And it's still really giving me a lot of trouble. And so I want to keep this video short in terms of typing and coding, so I didn't bother prettying this up. I have other lessons on the channel and on my website for how to make tables look a bit better than this, but anyway, let's get into the code. So first thing we need to do in order to track a drawdown is track our equity peak. So what is our equity peak? That is the most amount of money we've ever made at a certain point in time. A drawdown, by definition, is any amount of money our capital reaches that's below the peak. So to track that, we use a VAR variable. That means it's persistent and won't reset on new bars. We also need to count our maximum drawdown bars and our current drawdown bars. So this variable will save the worst drawdown we've ever had in terms of bar count, and this will track the current drawdown we're going through. And then when this number exceeds our maximum gets updated. These are all persistent variables. I also have an array here that is tracking every drawdown we experience. So every time we make a new equity high, this array is updated with whatever the last drawdown duration was. And that gives us the ability to very easily perform some basic statistical analysis on this array. So actually what I'll do is I'll add a tooltip to this table cell here that says total drawdown count, and then we can add str.toString. What was it? I've already forgotten the array name. Drawdown bars array dot size. That will tell us how many elements are in that array, which by definition will be how many drawdowns we have endured. So you can see that it says 150. That's the tooltip. So we have experienced 150 total drawdowns on this backtest. That tells us nothing of the duration of the drawdown. Even if it was for 2 bars, that would still count towards this number. And that's why we have this average here. And by adding this to an array, that gives us the ability to perform some really quick, simple, basic statistical analysis. Like we've got, so we can get the average just by using the inbuilt array functions. We can get things like the mode, the median, the max. We might even be able to track our total drawdown using max. Yeah, there you go. So I actually don't even need to track this, and I can get rid of this entirely. That's actually quite handy. That simplifies our script. And if I save my code, let's see if this still works as intended. And there we go. Change this back to average. And there we go. It never hurts to simplify your code a bit if you can. So why not? So now let me break down how I'm achieving this. It's quite simple. It's a little bit difficult to read if you're new to coding, but it's not that difficult what we're doing here. So what we're doing is we're checking if the bar is closed, so it is confirmed, it's not real time. Then this code gets executed. The first check we make is, did we just close a new trade? So if our current closed trades count is not equal to the previous bar's trade closed count, that means we just closed a new trade, and we can update our equity. So I could remove this bar state.isConfirmed and have this update on real-time bars if we wanted to, and that would track real-time equity peaks. But personally, the way I trade and the way I backtest, I'm only interested in realized equity. Now, if you're tracking something like max favorable excursion or max adverse excursion, you might not want to track that based on realized equity. But for my purposes here, this is fine. So if we just close the trade, we check, is our current system's equity larger or greater than our equity peak that we save? If so, we update it. So that's all within this scope. This next line gets executed regardless of whether we have closed the trade or not, and it checks if our equity is less than our equity peak, then we're in drawdown. And because we're calculating this on a confirmed bar, we can simply add 1 to our current drawdown counter, and that will track how many bars we've been in drawdown for. And then we have this else statement here, which is saying if our current strategy equity is not less than our equity peak, then that means we are in new equity high territory. We are not in drawdown anymore, and we can add our current drawdown counter to our array and reset the counter. So in other words, let's break this down visually. Here we have a losing trade. We enter long here. So we would count all of these bars here that fall below our entry price and put us in a drawdown until this bar is closed for a loss. And then when this bar is closed, the amount of bars we were in drawdown for gets added to our array, and we reset our counter for the next trade whenever that opens. And then here is where we can perform a bunch of different analysis. So here we're calculating the average drawdown, as I mentioned, by simply just using the inbuilt array functions to analyze the array elements. Then I'm creating a table. If the current bar is confirmed, then we update the table to a new table and we fill it with our information. Now I've made this a little bit more complicated than it probably has to be just to make it easier to read. If I go down to a lower time frame, you can see this is now showing minutes. And in fact, I could change that to hours by dividing it by 60. I might do that before I publish the script, but for now I'll leave it as it is. So yeah, I'll leave the source code below. Go and check it out if you're interested. If you are new to Pine Script or you're struggling to learn the language, check out my website, pinescriptmastery.com. I have a free basics course here that has several hours of content, 6 hours of free content, breaking down the basics of this awesome programming language to help you get started developing your own profitable systems one day. I know this isn't a particularly exciting video compared to some of the other lessons on the channel, but this stuff is important. And in future videos, we'll build on this information to help figure out when systems are broken. And this sort of thing can just help you get a better grasp on exactly how tradable a system is based on your personality. If you can't handle a couple of years in drawdown, but you have a system that has really strong performance metrics, you might not want to trade that system. You might need to adapt that system. Maybe you take a cut in your overall return, but you make it more comfortable to trade by reducing the duration of your average drawdown. These are the things we need to balance in our system development process. We'll go into all of this sort of thing in future videos when I get back from New Zealand. For now, I hope you guys find this helpful. I'll speak with you in the next video. Take care, everyone. I love you guys.